Hey there everyone, welcome to this new video. A lot of people have been asking me what is the best way to use a pin bar in forex trading. So I just decided to create this video about this is what the agenda of this and this video will be. What we are going to take a look is what are the pin bar patterns, how do they actually work, a pin bar pattern based trading strategy like I mentioned, and important points to remember and some common mistakes to avoid. So let's get started. Now the pin bar is basically a form of candlestick which has got a body and a wick. The highlighting point about the pin bar is that the wick is very large and traditionally the body is very small. So if you look at the pictures here, as you can see in both this example, the body is small and the wick is very long. Now the nose, this part is not typically taken into trading consideration, but is primarily the wick and to a certain extent body, which is important. The beauty about the pin bar is it can be used in any market, let it be forex, let it be stocks, let it be options. The fundamentals remain the same. So what you are going to learn in this video now for forex trading, using the pin bar in forex trading, the same concepts can be used for using the pin bar in the stocks market or the options market if you're trading in those markets as well. That is point number one. The other is that, like I said, pin bar is a candlestick setup and it indicates the point where market most likely may return or reverse. So again, forex is it's a probability that at the pin bar the market may reverse. That is the other point. The third is it happens when the market is moving in a particular direction. In that case, a pin bar candle will form and it would indicate that the market is about to reverse. So the extension to this point is a confirming candle is equally important to know whether the market is actually reversed or not. Let's look at this point further in the next slide. Okay, one more point I wanted to mention is a pin bar candle, like I mentioned, the ideal pin bar is having a small body and a large wick. But this kind of setup is not very common. Typically you will see a more common pin bar which has got a large wick and a large body. Something like the body will be about this big and the wick will be long. The important thing is to have a long wick. If the wick is not long, then it's not a pin bar. A pin bar needs to have a long wick. Typically the wick is larger than the size of the body. So traders can take trade, and if whenever they see a pin bar candle, let it be ideal pin bar or a pin bar which has got a bigger body. Now how to read the pin bar patterns? Like I said, the market moves in a particular, if the market is moving in a particular direction, a pin bar candle will be formed and it will indicate that the market is about to hit a major support or resistance level depending on the direction that the market is moving in. If the market is moving up and the pin bar is seen, then that would indicate that the market is about to reverse. If the pin bar hits a resistance level, it means that the market is about to reverse. The other way around goes true for if the market is moving down. If a currency pair is moving down and a pin bar is formed at a support level, that would indicate that the market is about to move up in the other direction. Ideally, the candle next to pin bar candle is the confirmation candle. When that happens, our trade can be opened. Now, if you look here, let's imagine this candle is formed when the market is moving up. This pin bar is formed. And the next candle ideally is a bearish candle. So that would mean that the trade can be opened. The other way around is when the market is moving down, a pin bar is formed a pin bar gets formed and the other is a bullish candle, which would indicate the market is ready to move up. Now in some cases, in fact in about 40 to 50% of cases, you would see that the next candles are not the confirming candles. Next 3 to 4 candles will typically form in this particular body. Like within the next 3-4 candles will be within this body only. Like there will be a candle which will be here. There will be a candle here, but the high and low of those candles will be inside this pin bar candle. If that happens, and after some time a candle comes which is a confirmation candle, then still the trade can be opened. But the problem will be if, for example, in this particular scenario, the candle opens here, and it goes like this, which is outside the body of the pin bar candle. When that happens, the pin bar has to be rejected. It means that the market has rejected this pin bar, and this pin bar should be ignored. Now, another important thing which I would like to tell you is, typically the pin bar work best when the pin bar pattern happen at a support or a resistance level. So if this pin bar is formed at a resistance level, that would mean that this pin bar indicates that the market is honoring this resistance level and is ready to go in the other direction. The candles next to pin bar candles are important. If the next few candles are within the body of the pin bar candle, wait for a candle that closes above or below the full pin bar. Like I was saying, if the next few candles are within this pin bar candle's body, then don't take the trade and wait for this kind of candle to get formed. Now let's look at a pin bar based trading strategy which is highly effective and which can be used as soon as you see the next pin bar in the trading chart. When the market is moving in a direction and a pin bar is observed, notice when does the pin bar occur. If the pin bar occurs at a support or resistance level, now this support or resistance level can be anything. It can be from the previous highs or previous lows, or it can be Fibonacci based support or resistance level, or it can be even a 200 effective moving 200 moving average. Then wait for the confirmation candle to happen. The confirmation candle, this is now the important part. The confirmation candle needs to occur in the next 4 to 5 candles. And candles between pin bar and confirmation candle need to be inside pin bar candle. So here's what I mean. For example, now look at this particular candle. This is a pin bar candle. It has occurred at this resistance level. But look at the following candle. Now this is not a confirmation candle, this green candle. But the important thing is the high of this green candle is within this pin bar candle, and same with the low of the green candle. It is also within the high and low of the pin bar candle. But if you look at the following candle, it is a clear confirmation that the market has reversed. And when this candle is being formed, the trade should be open as soon as the price is lower than the low of the pin bar candle. That is your entry point. Once the price crosses above or below the price of the pin bar, open the trade. Like I said, when the price reaches below the low of the pin bar candle, open the trade and place a stop loss which is 10 pips away from the long wick of pin bar. So this is, for example, this is the high. So what you are going to do is you are going to place a stop loss which is 10 pips away from this high, from this pin bar candle high, and then start placing 30 to 40 pips trailing stop loss. So in this example, your stop loss will be here. As soon as your trade is 40 pips in profit, we will move this 40 pips further, again 40 pips profit, again 40 pips further, and just like that you will keep trailing it. The ideal way to exit such trade will be when you, for example, have hit the profit which is the same as the stop loss, to indicate that you have got 1:1 risk to reward ratio, or when you have hit, for example, twice the profit of twice the size of your profit is twice the size of stop loss, to indicate your risk to reward is 1:2. Or you can set a goal like, for example, at 100 pips profit you are going to close the trade. Now there are some mistakes which I encourage you to avoid. The first mistake that the traders make is that they wait for a perfect pin bar. Like I said, if you try to wait for this kind of pin bar, you are going to lose a lot of trades. In this example, if you look here, now this is not the ideal pin bar. The body is quite big. So don't wait for a perfect pin bar. What is important is that the pin bar should have the long wick, like I mentioned earlier in the initial part of this video. For pin bar to be profitable, it should occur near a support or resistance level. If the pin bar occurs near a support and resistance level, it will increase the accuracy of the pin bar. Pin bar pattern should only be used on time frames of 1 hour or up. If you use the pin bar on a chart which is, let's say, 15-minute chart or 30-minute chart or 5-minute chart, the results are typically unpredictable. The pin bar accuracy is not very high. the pin bar patterns effectively, you must know support and resistance and candlesticks very well. Now, I know that you have spent last 5 to 7 minutes to watch this video, and I really thank you for that. We know time is money for everyone. So here's a free gift I would like to give you. I would like to give it to highly effective forex candlestick patterns that work very well with the pin bar patterns. I'm also going to tell you one candlestick mistake that 50% or more traders make. I am also going to share another highly accurate forex trading strategy which is based just on candlesticks. All you need to do is visit my website forexcandlestickmagic.com, and I'll give all this package to you for no cost. Just click here to watch effective and profitable forex strategy, which is included here, which is included as the part of this part of this package, and you can come across this effective forex trading strategy. Just visit my website and I'll see you there. Thank you for watching this video, and feel free to leave your comments below this video, and I'll try to reply to your comments as soon as possible. Thank you.